Show him a little bit of love. You know, we're going to have him back. Well, thank you very much for the love. Need some of that these days. I don't know how many thousands of jobs, but, we need the big mainframe to add them all up. Yesterday I heard 61,000 jobs were lost and, announced. Major corporations announced job losses, so we continue to grapple with the situation, with the economy, and you try to step back and say, what are we looking at? You're more of a macro view versus what President Obama, he's got to get in there. People are trying to micromanage this. Sometimes you can't see the forest for the trees, but the phenomenon we're just dealing with is, I think, it's capitalism mixed into a very free market economy, overlaid by huge personal liberties and freedom in the U.S., and you throw those ingredients together, and it's very, very high oxygen, chemistry, and it's very eventually, you can have an explosion, and that's kind of what we've had, I think, in this nation. Is we call it a bubble, an explosion, but capitalism met its match. We overdid it. We overindulged, and in some macro sense, that's the phenomena I see, is this overdoing of a healthy, of the right system, capitalism, with a free country. You mix them together, you get tremendous production, you get tremendous increases in standards of living, which we have generated over the years, but it gives you just enough rope to hang yourself. And that's what I think metaphorically we have done. We've just gone too far, and we're now, that choking noise we're hearing is our country and our economy, and we're sorting through it. But that all said, right now we're dealing with $825 billion stimulus package. What I'm not seeing over the last year is that the money we're throwing at this thing is really accomplishing anything. It's easy to say, where's the solution? I don't have it, but it's not just putting up money. And here's what I mean by that. Part of this money that we put up, the TARP money, $700 billion, the government wants to infuse our banks with capital, with money, so that we can get the loans moving again, the finance part of our economy moving. So they're saying to banks, you've got to go out and make loans. Now the problem that I'm seeing, it just on the mortgage level, I'm a mortgage broker, is that there just aren't enough loans to be made. When they say you've got to make loans, when the government says that, what we're really saying is make reasonable loans. Don't just take money and throw it at some borrower. We learned our lesson the hard way with that. You can't do that. We saw that in subprime loans. You have to lend to qualified borrowers, whether it's a home owner or a business or a state, a local government. All lenders, in whatever their form it may be, it could be a bondholder, is in effect a lender. Lenders are saying, no, we're not just going to loan money because we're Bank of America, you just gave us $25 billion and we're just supposed to loan it out. They're not going to do that unless the loans are good. Fannie Mae, who, of course, impacts the real estate industry massively. I mean, the single-family market is strictly Fannie Mae loans right now. Fannie Mae and Freddie Mac dictate what kinds of loans will be made. And Fannie Mae is doing what they call risk-based pricing. I think it makes sense. I mean, they've studied the histories, and they said if your credit score is 740, you can get a loan today, 5%, it's probably about a point. 30-year fixed rate owner-occupied loan to $417,000. It's a very, very good loan. I think very attractive. It's wonderful to refinance or buy at that rate. If your credit score is 630, everything else being the same, 75% loan to value in this one sample I'm going to use, it's not 1 point, it's 4 points. 630 and credit score and 740 credit score, there isn't necessarily that big of a difference. And granted, the 630 credit score had some late payments, maybe had a car repossessed. But I can look at those two credit reports, and I think, as somebody who looks at credit all the time, I can look at that 630 credit score and really come to the conclusion they're going to pay that loan back. It's a very good credit. I think there's a very good chance they will make their payments and can get comfortable with that. But it will cost 3 points more. That's discouraged. The transaction does not get off the ground at that pricing level. And again, I can see, though, where Fannie Mae needs to price that way. So the point of this is, until our lenders are comfortable that the loans they make are going to get paid back, we're going back to basics here, they're not going to make the loans. So you can't force the banks to make the loans, and that's the proper thing. It's sort of how we got into this. It's too easy of underwriting. Let's put the discipline back in the loan underwriting. And it's kind of a process. It is happening. And some of the one of the interesting things I saw, you may have seen advertisements now. Hyundai, the car maker, is saying if you buy a car from them and you lose your income, i.e. lose your job, within 1 year, they'll buy your car back.
Wow.
Or they say words to that effect. That's what it's television commercial that you'll see running now. So they're addressing the fear, the concern that Americans have, what if I lose my job in the next year? Obviously, that's a big part of the psychology of this country. I'm not spending anything because I may lose my job. That's the vicious cycle. And then you don't spend, and then somebody else goes out of business because you didn't buy whatever it was you might have bought. Their business closes down and exacerbates the situation. So Hyundai says, don't worry about that. We'll buy your car back. Now, I wonder about the financial statement of Hyundai, because I would think that means they got a contingent liability on their accounting statement. I mean, what if they sell 500,000 cars and they got to buy back 200,000 of them? Isn't that a major liability potential that they have? How does that affect their financial statement? And then people that are going to loan to them, buy their bonds, they got to factor that in. Now, interesting things happening in the market. Very good home rates continue to be available. Apartment commercial rates in the mid to high 6s, 6.5%, 7% is what you will find. You probably need to have 1.20 debt coverage to get a loan now on an apartment property, and maybe 125 to 130 debt coverage on commercial properties. That is more conservative than you would have run into 6 months ago and a year ago. So money is there, but you're going to have very good cash flow to get your transactions funded in apartment and multifamily deals. Last point, I will close, another kind of political note here, but Tim Geithner was just approved as the new Treasury Secretary. That's a big position these days. If you're the Treasury Secretary in a bad economy, so that's a major position. So he was appointed. Now, he's the one, if you heard, that there was a lot of controversy because he is the president of the New York Fed now, which is the biggest Fed position below Treasury Secretary. He didn't pay his taxes for a couple of years when he was in that position. And I don't know, there's certain rhetoric. I don't know if he forgot or his dog ate, his returns or whatever. I'm not quite sure what the explanation was, but he didn't pay his taxes. And he's supposedly, he's extremely talented. I think everybody out there that knows about these things said this guy is competent. This guy is really skilled at what he does. But he's got this taint now. So, and I don't know that much about him, but I understood he had a great reputation. I thought when I heard he was nominated for Treasury Secretary, I thought that's great. Here's a good guy, and we need a good guy. I don't think he should have been appointed myself, because that's the last thing it seems to me that we need, is somebody who's now supposedly going to take part in enforcing so many things and keeping the game honest and a level playing field. And he's got this, he didn't play by the rules. So how's he going to have the moral authority to come down on major corporations and, throughout our corporate infrastructure and say you got to follow the rules? I think they should have left him where he was doing a great job, and find somebody else to be Treasury Secretary, somebody like Paul Volcker, who was a chairman of the Fed for many, many years and was great at that. So we do need to get this moral authority in our positions, major positions and cabinet positions, because how else are we going to enforce this sort of new